Large businesses are essential to building a workers' comp book as they add fast production volume to your book of business. However, you do need to keep in mind that it's one large policy you can easily lose in a year's time. So seeking out large businesses will be more challenging, not just for new business, but also renewals, as there's a lot of competition with the size of premium. A lot more strategic planning goes into large businesses. Even when you do have the account, you bind it, you get that new business, you have to be thinking about the renewal term a few months out, making sure you're quoting the business with other markets in order to obtain the most competitive premium. Because if you aren't, you can guarantee another agent is. You'll have far less of these policies, but you'll need to pay attention to them more than any other. Large businesses are going to be those over $50,000. So your businesses that qualify as larger accounts are the ones with greater exposures, more accidental exposure, and higher rated class codes. Businesses such as contracting and manufacturing are some of those larger businesses because they may have multiple locations, higher payroll, or multi-state exposures. As you become more qualified, you will begin to attract larger sized businesses, and I can help you bind them. During COVID, we saw that the workers' comp industry managed to get through unscathed. However, coming out of that, we're now starting to see the carriers tightening with risks that have a poor loss history, and it's showing painfully so in the insured experience mod. So one strategy for larger businesses is implementing carrier services such as customized loss control and claims management services. Whether they have a lot of claims or just a few, it's a huge benefit to their business. Many of these large accounts aren't always offered these types of services or don't take advantage of them. This is inevitably going to help the insured's business in avoiding claims. So when you're presenting this quote offering these services that the carrier provides, it gives you that edge that another agent may not be doing. For insureds that have a large premium or high risk exposure, I highly recommend you present this to them when giving them a quote. Each of our carriers has their own guidelines for quoting high experience mods, but generally the markets we're appointed with can do quoting upwards of 200%. This is actually really great given how bad that experience mod is, but right now our carriers are, if they see an upwards turn in the claims, they are willing to give that business a chance. So before we get into our large business case study, I do want to mention a few classes of business that have competitive rates right now. These are going to be manufacturing, landscaping, contractors, painting, plumbing, electrical, and janitorial services such as commercial and residential. We are seeing the contracting market opening up, and more carriers are wanting to write these types of risks when quality. So we are seeing competitive rates being applied. Something to keep in mind definitely for future quoting. So we're going to walk through this large size business and how I would approach quoting this and the important strategies I utilize in order to bind the quote. So this risk has a plumbing exposure with one location in Los Angeles. They have close to 40 employees with over $1.4 million in payroll. You'll notice there's two class codes, 5183 and 5187. So with contracting risks, you need to pay attention to this. A lot of the times they are broken out by hourly wage. So when you're receiving that application, make sure payroll is broken out by employee hourly wage. Otherwise, the classifications will be wrong when you're quoting. As I'm doing a review of the risk, which obviously stands out to me is going to be the 134% experience mod. This means the business will be receiving a 34% debit on their policy. So I would definitely be requesting physical loss runs for at least the past 5 years to review the claims they've incurred. So as I'm reviewing the claims history, they have incurred over $100,000 in losses, and 3 claims are still open. So an experience mod is a rolling figure, so it may continue to increase as long as those claims are still open. That's why it's really important that the insured utilizes loss control carrier services, and that can be your competitive edge to mention when presenting the quote to the insured. So I would be looking for information on the claims as to whether the injured employee or employees are still working for the business, if the insured has implemented any safety training or measurements since the claim occurred, and what does their supervision look like within the business. These are things that the carrier will ask, so it saves time getting in front of the questions you know are coming. And this can be a determining factor also when asking for premium savings to be applied to the quote. Since the insured has been with two carriers, I would want to know if this was carrier or insured initiated. So were they non-renewed or canceled by the carrier, or is the insured moving each renewal to a different carrier based on premium amount? This is something that is really important because if it is insured initiated, when the renewal is coming up each year, the insured does have a history of quoting and moving their policy to other markets. So as I mentioned before, you want to get in front of that a few months out before another agent beats you to it. So after reviewing the loss history, the experience mod, and the Accord 130, I submitted my risk to the markets that I know are doing well with contracting exposures, and I was able to quote and bind the policy within 5 days.